Enable.
Headquartered in the National Capital Region, Airtel is among the top 3 mobile service providers in the country. With operations in 16 countries across Asia and Africa, the company offers a broad portfolio of services to large enterprises, government, SMBs and carrier customers, and offers 2G, 3G and 4G wireless services as well as mobile commerce. As part of Season 6 of FinWiz, the National Stock Exchange and CNBC TV 18 hosted an interactive investor awareness program at the Airtel campus in Gurugram. Renowned financial experts interacted with Airtel employees on the road to investing in oneself for long-term prosperity. Hello and welcome to Season 6 of NSE FinWiz, powered by CNBC TV 18, the show that spreads financial literacy among young salaried professionals and gives them tips on how to invest and manage their money better. On Season 6 of the show, we are exploring how investing in yourself can lead you to long-lasting prosperity. And today we are at the headquarters of global telecom giant Airtel in Gurugram, Haryana.
Financial literacy is the ability to manage my money in the most efficient way. So like both in terms of expenditure as well as investments and savings.
I think financial literacy for me is owning your expenses, understanding why expenses, earning minus savings and not the other way around.
A lot of things that we hear are from people who haven't made the right decisions, or it's usually from hearsay. So it's nice to get a perspective from the experts.
Hello and welcome to Season 6 of NSE FinWiz, powered by CNBC TV 18. Today we are at the Airtel campus in Gurugram, Haryana, and we're joined by a set of financial experts who are all geared up to engage with Airtel employees here. Let me introduce you to the experts. Tanveer Alam, CEO of FinCart, and Feroz Aziz, Deputy CEO at Anand Rathi Financial Services. On NSE FinWiz Season 6, our theme is Invest in Yourself, Your Path to Prosperity. So starting out with that theme, Tanveer, if you had to invest, say, in a car, in a house, in your kids' education, in your own higher education, all of this amounts to investing in yourself. How do you link these aspirational investments with financial goals, and how should you really map that way forward for the next decade or two of your life?
There's a very interesting study in a book written, What They Don't Teach You at Harvard Business School. Okay. So the researchers studied 100 students and asked them only 2 questions. 1, do you have a goal in mind? And 2, if you have a goal, do you have a written plan? So majority of the people, 84%, neither had a goal nor a plan. The second audience, 13%, had a vague goal in their mind but did not have a written plan. Only the minority, 3%, had a written goal and a plan. So the same author, after 10 years, goes back to the same set of students to judge how much they have earned. The first set, who did not have a goal, earned X. The second, who vaguely had a goal and did not have a plan, earned 2X. And the third audience, who had a goal and a plan, earned 10 times both these people put together.
Wow.
That's the power of having a goal. Now, this is one part. Secondly, having a goal helps you choose the right set of product. In fact, I was sharing with somebody here, if you've got to go from here to your next door Kirana shop, the most efficient will be to either walk or take a cycle or bike. If you want to go to say Noida from here, most likely you'll use a car. If you want to travel to Bombay, you'll take a plane or a train. If you have to go to London, you'll take a plane. So each vehicle has a certain use for the destination that you want to go.
Right.
Similarly, your goals are set. Based on the time horizon of your goals, you need to pick up the appropriate product which will help you to achieve your goals.
Feroz, what are those various types of vehicles that can take us to all of these different goals? how should a young first-time employee really go about doing asset allocation and deciding where to put his or her money?
There are several vehicles. These vehicles which help us meet goals are called assets to start with. What are assets? What are expenditures? Asset is anything which you expect it to repay back to you. So investing in a company as a partner is called equity. Lending to a company and not being worried about its performance is called debt. Okay. Third asset is real estate, which we are as Indians very familiar with. And the fourth asset is precious metal like gold. So these largely are the four assets which you can live your life with. Most of the rest are distractions.
But Tanveer, clarify to those who do not understand the difference between equities and mutual funds. How does your money get routed through both of these vehicles?
Okay, you have two choices: directly investing in an equity market or investing via equity mutual fund. So I'll give you three things that you need to judge yourself. Now, one is access to research and information first. So when you're investing through a mutual fund, you are investing via the help of a professional against a small fee. And when you're investing in direct stock, you're investing yourself. Two, the quantum of money that you have. Okay, so if it's a very small of money, you may not be able to build a good direct portfolio. Okay, and third is the time availability. How much time are you able to give? Okay, many people just invest few minutes, few hours, not even in a complete year. Yeah. Then direct equity will not be for you. So pass your question to these three filters. Now, in all these filters, if you are very close to even a fund manager, if not better, then by all means invest in direct equity. Right. But if you feel that you cannot, either you don't have time, you don't have enough money, or you don't have enough expertise, then please do not experiment with the market. Take the help of a professional equity fund manager and invest via this. All
right. Thank you very much, gentlemen. We are going to take a short break right now, but stay with us because the conversation with our financial experts continues right here on NSE FinWiz, only on CNBC TV 18. Welcome back to Season 6 of NSE FinWiz, powered by CNBC TV 18. We are at the Airtel campus in Gurugram in Haryana today, and our financial experts are engaging with Airtel employees. Our core topic of discussion today is mutual fund investment and prosperity. Can mutual funds lead us to prosperity in the long run? Should one invest in active or passive funds? So, coming right to that question first, please distinguish active and passive funds for us, Tanveer, and which one should one be investing in?
There is two ways of choosing a fund. Okay, so if you do not want to take the trouble of actually choosing which fund manager and which fund will do well, the safer way of is picking an index or an ETF fund. That's a passive investing. You simply get yourself invested in an index, and if the market goes up, you move in line with the market. The other are actively managed funds. In India, historically, the actively managed funds have outbeaten the Sensex by a fair degree of margin. And there you need to pick up the best fund that you have and generate some extra return that you have. There is a difference between active and a passive fund. Basically, it is very, very difficult to choose one fund manager who will do good across all market cycle and will remain a number one fund. So a lot of number one fund of historical years have not remained a number fund right now. So don't waste your time doing that. What you can actually do is look at few filters. Okay. Now you need to have a fund or a fund manager who has passed through a number of good bulls and bear market, ups and down. And if he's done a fair job, that's one filter that you look at consistency of return over a long-term period of time. Two, a fund which has got a decent asset and a diversified equity fund, not focused to any sector, because a normal retail investor cannot time that market. That's one filter that you look at. Now the third ratio which could be available to you at some of the comparing websites is look at Sharpe ratio. a good Sharpe ratio will give an indication that this fund is delivering a return better than the risk that they are taking. Use just these 3 simple filters and you'll most likely will pick a good funds and stay invested for a long course of period if you picked an equity fund.
Okay. And Feroz, how many different kinds of mutual funds are there, especially ones that lead you to prosperity in the long run, in the short run?
SEBI has tried to declutter the entire space by classifying mutual funds into different categories, 10 equity categories and about 18 debt categories if I'm not wrong, out of which a fund could be either equity or debt. Equities are the riskier ones, debt are the more stable ones, and then the next obvious is the ones which mix both of them. Those are called the hybrid or the balanced as the nomenclature suggests. So equity, debt and balanced, 3 broader categories. In the equity side, people should not get bothered with all the 10 categories. You should look at large cap and mid cap, at best multi-cap. So only 3 categories are relevant and you can spend the next 20 years without bothering about the 4th category. On the debt side, you have short-term parkings. You can invest for as little as 5 days. Those are called liquid funds. Fortunately, the name suggests the objective, so they're very liquid. The other ones are accrual debt funds. So stick to accrual funds and liquid funds in the debt category. On the equity category, you stick to 3. You can live without the balanced funds.
That's great advice. Now let's look at some of the questions from the Airtel employees here. This one is from Manish Char, DGM Customer Experience, and he says, people are saying invest in mutual funds for the long term, but when markets correct in 3 to 5 years, all the profits will go down. So should we be investing in mutual funds for 3 years or 10 years?
If you use equity market for flirting and trying to outsmart the market, you are bound to lose your money. Right. If you marry with it, it will yield you good results and you will make a great amount of money investing in the market.
Next question is from Ashish Chintal, Senior Manager Sales. If I'm an aggressive investor with a 10 to 20 year time frame, would you recommend investing in startup as angel fund versus investment in small or micro cap funds? Feroz?
See, the difference between managing your money and a casino is only the probability.
Right.
So any long-term financial decision has to be on high probability, not on high return. Right? So probabilities have to be focused upon, which we end up missing, point 1. Point 2, if you are an aggressive investor, you can definitely look at a larger weightage towards the mid cap and the small cap space, which have 20% more risk than the large cap category. It will pay you off by giving you 2 to 3% extra than a stable large cap fund.
Right.
So is it worth taking that risk? The answer is yes.
The final question for this segment is from Sohail Ahmed Khan, Management Trainee in Customer Experience. What are the factors that will determine the volatility during the 2019 election?
The focus should be on the goal, not on the market. And volatility is a part and parcel of equity fund investing. And as I said, the volatility, if you invest over a period of long time, the volatility mitigates and it even completely gets eradicated, eliminated. But if you look at volatility over a very short term period, it will be extremely severe.
Right.
Hence, it is advised that you please look at your goals and start investing. Okay? Don't look at volatility. These events will come and go. Nobody will remember these events.
All right. Keep investing. Don't look at volatility. That's the message that our experts are giving out here at the Airtel campus in Gurugram, and we're going to head into a short break right now, but stay with us because on the other side, Airtel employees will be asking questions to our experts right here on NSE FinWiz Season 6, powered by CNBC TV 18. Welcome back to Season 6 of NSE FinWiz, powered by CNBC TV 18. Today we are at the Airtel campus in Gurugram and our financial experts are engaging with the employees here. Before I hand it out to the employees, one question that we often get asked is, should one be investing in lump sum or via SIPs? There are almost 2 crore SIP accounts now in India. The magic of mutual funds is sort of catching on. Feroz, what's your preferred route?
To my mind, they are not either or, because most of us are in situations which are conducive for both the channels of investment. So point one I'm making is both are important investment strategies, if they can be called so. Second is you will have to have a minimum threshold of what your salary should be invested. You can't invest of whatever is left. You have to spend whatever is left after investing. That completely will change the dynamics, and the reason being that you will have to survive 20-25 years without an income.
Okay, so any questions that you all have, please raise your hand and wait for the mic to get to you.
I'm equity investor. I invested 5 years back in, at that time it was around 120, 130. But now it crashes down up to 20 and now it is going back to 40. So I just want to know, should I still remain in this equity because it has been 5 years, a long time, and it has been acquired by Tata. So what is the opinion from expert?
See, one is, I don't think this show is about stocks, but there is a message there. Point one is, there could be one company which can go down the drain. There could be, right? It's not written off, but 120 rupees you invested 5 years back at the price of 120. In 5 years, at 15%, you should have ideally got 240 rupees. Instead of 240, you have 40. That's because you bought one share. What I'm trying to get to is, if you don't have 20 shares, even if you went direct equity, you have to create a portfolio of stocks. You can't buy one stock or two stocks or three stocks. The optimal statistically proven portfolio size of stocks is upwards of 22. You need to have 22 stocks, right? Mutual funds might have 50, 60. That's why their risk is 1/3 of most stocks.
People are talking about IT sectors and pharma sector 2 years back. So both are in very bad shape because they are going down, down, down. So now IT sector has been come up very fast with the 20% return in 1 year. But still pharma sector is the very bad shape. If you see that 3 years return around 26% down in 3 years return. So what do you expect? It is pharma will going to give good return in next 2 years, 3 years?
Pharmaceutical is a sector which we can ignore. It's not a sector of choice. It's a sector which will not go outdated even after 100 years. So I would say that the case of pharma investing becomes stronger and stronger with historical bad performance. Because anything which goes down and is important will have a reversal. So if you ask my personal opinion, pharmaceutical over the next 3-4 years will do significantly better.
Some of the strategies that exist is you put the money in a debt fund and then do an STP into a equity fund. So if the investment horizon is say 5 years or 10 years for that matter, is that still recommended, or then the suggestion is put one lump sum into equity because anyways I have 10 years to play with?
If the market valuation is a little steep, then a good advisor would want not to put all your money in that high valuation market, rather take the money in a debt and stagger it over a period of time if he is expecting volatility to be there, like in the current scenario. Times when you have this kind of uncertainty, it is advisable to go through the STP route and not go in that lump sum mode.
All right. Thank you very much, gentlemen. Thank you, Airtel, for having us on your campus here today. With that, it's a wrap of this episode of NSE FinWiz powered by CNBC TV 18. We'll be back next time with more money mantras from another set of financial experts and from another corporate campus of India. Thanks for joining us. Goodbye.
The event was very engaging and insightful, and especially the way Tanveer took it. He shared the anecdotes and then told us the learning from the anecdote, and I found it very interesting.
So I have 3 things which I learned from this session. First is what are the various kind of instruments which I can invest my money for growth. Secondly, the time horizon for which I should make the goals, that's a short-term goal and long-term goal. And third and important is making a goal for myself which I can see and invest money for the future.
I have a very important goal in my life to have an independent house for my parents, and I think with this discussion I would have a proper plan and implement it.